Alrighty, what is going on, everybody? Welcome back to another quick CYPRX fundamental video breakdown, giving you guys some insights into key economic data that you all should be paying attention to, things that are driving risk on, risk off sentiment. So let's jump in. Yesterday on the X Space, I posted to you all our fundamental breakdown that we give to our private community members. And I want to take your attention down to the bottom of it, where I mentioned that for us to see a potential recovery in risk assets, market participants will need to be looking for weak US data, stability in geopolitical tensions to alleviate demand for the United States dollar, and dovish commentary from Fed officials going over in detail every single fundamental that was going to come out this week. Now, fast forward into Sunday and Monday's market rollover. Let's just cover the past 24 hours and go over a market overview. All right. So on Sunday, there was a modest rebound in risk assets as tensions in the Middle East did not escalate any further, albeit investors are still remaining cautious. President Joe Biden conveyed to Israeli Prime Minister Benjamin N., I'm not going to butcher his last name, saying that the United States would refrain from participating in any retaliatory actions against Iran, according to sources familiar with the matter. Now, in the cryptocurrency market, during Asia's session, the entire cryptocurrency market capitalization as a whole saw a continued recovery as Hong Kong approved spot exchange traded funds, or ETFs, for Bitcoin and Ether. The Hong Kong Securities and Future Commission conditionally gave the green light for the first spot Bitcoin and ETH ETFs on April 15th. With at least 3 local issuers, including Hong Kong units of Harvest Fund Management, Bosera Asset Management, and China Asset Management, set to launch their ETFs soon. This development injected some optimism back into risk assets and the entire cryptocurrency market capitalization as a whole. During the Asia session, we saw a slight increase in the value of the total crypto market cap, although this was very short-lived, as the bullish momentum corrected during the New York session, which commenced on Monday. Now, yesterday in our private Zoom call and via the fundamentals that we deliver to our private CYPRX community, in our pre-planned analysis, we noted that any upbeat US data today could further strengthen the dollar and exert more downward pressure on risk assets, i.e. in this case, cryptocurrencies, by undermining the narrative for rate cuts, which we all know has been a significant driver of demand for risk assets since late October 2023. During the New York session on Monday, the dollar reached its highest level since early November against a basket of currencies, following a stronger than expected increase in US retail sales for March. Retail sales grew by 0.7% last month, with February's data also revised upwards, showing a rebound of around 0.9%, surpassing the previously reported 0.6%. Economists surveyed by Reuters had anticipated a 0.3% rise in March's retail sales, so there was a significant increase on that US data front. The dollar strength has been fueled by persistent inflationary pressures and robust economic growth, leading investors to recalibrate their expectations for Federal Reserve rate cuts. The market is now forecasting fewer than 225 basis point cuts by year's end, down from the previous expectation of 3 rate cuts ushered in 2024. Now, leading into tomorrow, our focus will be oriented on 2 key factors on the US data front. That is industrial production month over month and a series of Federal Reserve speakers lined up for the day, including FOMC members Williams, Barkin, Jefferson, and as well as Fed Chair Jerome Powell. The direction of risk assets and the strength of the dollar will hinge on the outcome of these events. Ideally, to witness recovery in risk assets and a weakening of the dollar, we would hope for a discouraging US data coupled with dovish commentary from Federal Reserve speakers reinforcing expectations of rate cuts. However, given recent higher inflation readings and positive labor and economic data, such a scenario seems very improbable at this current moment in time. Therefore, if the Fed speakers tomorrow lean towards a more hawkish approach, delivering hawkish commentary, it is likely to bolster the dollar strength and further dampen risk sentiment surrounding risk assets, potentially adding to further downward pressure in the cryptocurrency market capitalization as a whole. Keep in mind, we also have the Bitcoin halving coming up, and I want all of my followers to really understand that zooming out, I am very bullish on the digital asset space in the long term. I also understand that pullbacks and corrections, if we're in a bull market cycle, are healthy. So here at CyPRX, we are taking advantage of any discounted opportunities in the now and any further discounted opportunities that come into fruition in the near future. Take that into consideration moving forward. Another thing I want individuals to consider is why this pullback is happening based off of these fundamentals. Remember, these markets are driven by market makers, large asset managers, hedge funds, family offices with much more money than you and I, and they are day trading these markets. They are not utilizing these digital assets for their intrinsic utility yet, right? We're not in a utility driven market. We're in a trading environment where 95% of the digital asset transactions in this space are due to speculative trading. So that means that these fluctuations in prices of risk assets are going to pertain surrounding fundamentals, surrounding geopolitical tensions, surrounding risk on, risk off market move. This is why it's extremely important for you all to be paying attention to these factors. Again, here at CyPRX and within inside the CyPRX community, we teach these fundamentals in detail intraday, weekly, and on a monthly basis. With that being said, make sure that you're paying attention to these factors as we roll over into tomorrow's trading session. Our focus again will be oriented on the US data via the industrial production, seeing if it comes out upbeat or downbeat, and then also our attention focused on the FOM speakers that are lined up to deliver some commentary tomorrow during the New York session. Whether they deliver a more dovish approach or more hawkish approach, we will see. As always, many blessings to you guys, giving you guys the realest information, always ahead of the curve. Remember, make sure that you're following us on X so that way you can read these fundamental pieces that we put out to you guys. Make sure that you subscribe to the platform. And if anybody's interested in joining our private community, you guys can always visit CYPRXtrading.com. Reach out to me with any questions. The customer support email is in the description down below. I will see you all in the next video breakdown.